Most people think inflation is an accident, a mistake, a temporary miscalculation that governments are always trying to fix. But what if I told you something unsettling? Your money is designed to lose value, not by error, not by incompetence, but by structure. Every dollar, euro, pound, and even rupee you hold is programmed silently, mechanically, mathematically, to be worth less tomorrow than it is today. And the strange part? This system didn't start with modern politics. It began centuries ago, with kings who clipped their coins, bankers who rewrote the rules, wars that forced impossible choices, and a global financial machine that now traps every nation on Earth. But don't worry, we're not here to fearmonger. We're here to uncover a puzzle that almost no one explains clearly. Why does money lose value? Why does it keep happening again and again throughout history? And why can't any government, no matter how powerful, stop it? By the end of this video, you'll see why inflation isn't a bug. It's the feature that keeps the entire economic engine running. Let's begin. How money first broke the first time money was modified. Imagine ancient Rome around 200 AD, their currency. The silver denarius was trusted everywhere, strong, stable, reliable. But Rome had a problem. Its empire was expanding too fast. Armies needed to be paid. Roads needed to be built. Wars never stopped. Taxes alone couldn't fund everything. So Roman emperors did something clever or dangerous, depending on how you see it. They diluted the silver. If a single coin used to be 95% silver, they reduced it to 85%, then 75%, then 50%, then 5%, and nobody noticed at first. After all, the coins looked the same. Same stamp, same emperor's face, same weight. More or less, but slowly, silently, prices began rising. A loaf of bread cost more, a soldier's pay bought less. Families found their savings evaporating. Rome wasn't experiencing inflation. Rome was experiencing value erosion engineered by design. Why they did it? Because it was the only way to survive. Without reducing the coin's metal content, Rome would have collapsed earlier. By diluting the currency, emperors created artificial money. More coins equals more spending power. But there's always a catch. When you create more money without creating more goods, prices rise. And that pattern, destruction of money from the inside, became the blueprint for the next 2,000 years. When money stopped being metal, the birth of paper lies fast forward to medieval Europe. Merchants were tired of carrying gold. It was heavy, risky, and noisy. So goldsmiths offered a solution. Give us your gold, we'll store it in our vault. And we'll give you a receipt you can use as money. And people loved it. Those receipts, early paper money, became more convenient than gold itself. But soon, goldsmiths noticed something. People rarely came back for all their gold. So they began issuing extra paper notes, not backed by real gold, and loaning them out for interest. This was the moment money divorced reality. It was no longer something valuable. It was a symbol, a promise, a bet. The foundation of modern banking was born. The system no one voted for. This system exploded in popularity because it made economies grow faster. More loans gives more spending, gives more growth, gives more debt, gives more money needed, gives more printing. A cycle that feeds on itself. But the truth remained. Paper money only worked as long as people believed it was backed by something real. Belief became the new gold. When the world cut the last rope, the gold standard era, by the 1800s, countries tried to create order by linking paper money to gold. This was called the gold standard. It forced governments to behave, at least a little. You couldn't print unlimited money, you had to maintain gold reserves. It was stability, but it was also a cage. World wars and the impossible dilemma, then came World War I and World War II. Two global disasters that demanded impossible amounts of money. Governments faced the same dilemma Rome had. Option A. Raise taxes and tell citizens, we can't afford this war. Option B. Print money and pretend everything's fine. Guess which option leaders chose? They printed, and printed, and printed. By 1944, the world needed a new financial system. So nations met in Bretton Woods, New Hampshire. They agreed. The US dollar would be linked to gold. Every other currency would be linked to the US dollar. A pyramid with gold at the top, the dollar in the middle, and everyone else at the base. But this system didn't solve the real issue. Governments still spent more than they earned. 1971, the day money became an illusion. By the 1960s, America was printing more dollars than it had gold. Countries like France noticed and demanded their gold back. The US realized it couldn't pay. So on August 15, 1971, President Richard Nixon went on TV and announced something shocking. The United States would no longer convert dollars into gold. The last connection between money and reality was severed. Money became fiat, backed by nothing. No metal, no limit, only trust. This was the moment modern inflation became inevitable. Why money must lose value now? The debt engine. Today's financial system runs on debt. If all debts were paid off tomorrow, the entire economy would collapse. Banks create money by issuing loans. When you borrow, new money is created. When you repay, money disappears. This means, to keep the economy alive, debt must keep growing. More loans gives more money, gives more inflation. If money didn't lose value, people would stop borrowing. If people stopped borrowing, the system would stop moving. Inflation isn't an accident, it's the fuel the engine runs on. Why governments need inflation? Inflation does three things. 1. It reduces the real value of government debt. If a country owes $30 trillion, inflation makes that debt smaller in real terms. 2. It pushes people to spend instead of save. If your money loses value every year, saving becomes a losing game. You're forced to invest, borrow, or spend, which keeps the economy moving. 3. It creates invisible taxes. Instead of raising taxes and facing public backlash, governments let inflation slowly erode your purchasing power. It's taxation disguised as price increases. Why you can't escape inflation? People think inflation is temporary. But the truth is, inflation is permanent because the system collapses without it. No inflation equals. No borrowing gives, no spending gives, no growth gives, recession gives, unemployment gives, political instability. So governments choose the less painful poison. Why solutions keep making it worse? Central banks to the rescue. Or not. Whenever inflation rises too fast, central banks try to slow it by raising interest rates. But rates can't stay high forever. Because if interest rates stay high, mortgages default, businesses collapse, governments can't pay interest on their debt. The stock market crashes, the economy freezes, so central banks eventually lower rates again, which triggers more borrowing, more debt, and more inflation. It's a cycle with no escape. Printing money, the most popular solution, 2008 financial crisis, 2020 pandemic, every major recession. Governments always reach for the same tool, print more money. But printing money is like adding more water to soup. The pot looks full, but the flavor gets weaker. Why? Tech war and globalization haven't fixed it. People hoped technology would reduce inflation. Instead, it made rich people wealthier and poor people poorer. People hoped globalization would make things cheaper. But the moment supply chains break, everything becomes more expensive. People hoped peace would reduce spending. But wars never end. They just change shape. History is repeating shocking modern data. Here's what most people don't know. The US printed 40% of all dollars in existence in just 2 years, 2020 to 2021. Global debt is over $300 trillion, the highest in history. Most currencies lose 2% to 10% of their value every year. The average person's savings lose purchasing power faster than wages rise. It's Rome, but with smartphones. It's 1600s goldsmithing, but with banking apps. It's the 1971 dollar shock, but happening every few years now. The hidden pattern: every empire, Rome, China, Britain, Spain, France, the Ottomans, followed the same pattern. Rise, expansion, overspending, money debasement, inflation, collapse, or reinvention. The US and global economy are now in phase 4 and 5. What happens next? No one knows the exact timeline. But economists agree on one thing. The next 20 years will redefine money. Digital currencies. Central bank digital money. A possible new global reserve currency. Or a completely new financial system. But the core rule will stay the same. Money will continue to lose value because that's how the machine is built. 3 takeaways. Takeaway 1. Inflation is not an accident. It's the system. Your money loses value because the economy relies on ever-growing debt. Inflation is not a flaw. It's the engine. Takeaway 2. Saving cash makes you poorer over time. Keeping money in a bank doesn't protect you. It slowly drains your wealth. Only assets, skills, and investments preserve value. Takeaway 3. Understanding the system gives you power. Most people stay poor because they never learn how money actually works. But those who understand the game can play it differently. Final warning and open question. Your money was never designed to hold value. It was designed to move, flow, devalue, and keep the machine running. The question now is, will you let the system drain you quietly? Or will you learn how to navigate it before the next reset arrives? History shows what happens to people who don't pay attention, but history also rewards the ones who do. If this opened your eyes, even a little, then subscribe to the channel. Because in upcoming videos, we'll break down the hidden forces shaping your wealth, your savings, and your future. Like the video. Share it with someone who still believes inflation is just rising prices. And tell me in the comments, do you think the current system will last another 50 years? Why or why not? This is Money's Hidden History. And we're just getting started.